This is to show how I would choose an ETF for my portfolio through the ETF.com screener. My goal is to grow as much as possible, and my time horizon is long term. I don't need to pick an option for every category in the screener, but I can always go back later. First, I choose North America for the region and US for the geography, because I want my investments to be from firms in the United States. Under segment, I choose large cap growth. I'd like to hold large-sized companies with high growth potentials, for example, Tesla. Next, I can set tradability to 70 and above. Tradability, or liquidity, means how easy it is to buy and sell this fund. This indicates interest from other investors in the fund. I'd look for funds with high trading volume to be able to sell the fund when you want to exit. Fit is a measure of how close the fund tracks the underlying index. I set this to 70 and above. For example, lots of funds follow the S&P 500 index, but it doesn't mean they have exactly the same stocks. Finally, I exclude inverse and leveraged funds. Inverse follows the opposite of the index, which I don't want. Unleveraged means that the fund borrows money to invest, which is extra risky. Scrolling down, I can now see 11 choices. At this point, most of these funds satisfy my goal of growing, but I need to pick one. Now I can click the expense ratio to organize the funds. Since most of these funds are similar, I should go for a better economically managed fund. The lower the expense ratio, the better. I can also look at the AUM, assets under management, and the spread of the ETFs. Both of these can show the tradability of the ETF. AUM is how much money the fund has in its pool. The higher the AUM, the better. The spread is the difference between the bid and ask prices for the ETF. The smaller the spread, the better. Juggling between the expense ratio, the assets under management, and the spread, I can narrow it down to 2 or 3 choices. Now I can click on the fund ticker to get more information about the fund. I see what index the fund tracks and what is in the index. After reading through each fund, I decided to choose VUG. It has 6 growth factors to consider for each company, the largest assets under management, and the lowest spread. This is the way I would choose my ETFs, but you can adapt it to your needs.